Hey, everybody, welcome to Tuesday. You know what Tuesday is? We're in the house. I'm the mortgage guy. And of course, flying high with me is my co-captain, Sandra Brown. Of course, we're part of the Ontario approval team over at Mortgage Alliance. And we're going to talk to you guys about things you need to know when you're talking to your mortgage broker or your bank. Some of the documents that you're going to need to know and have and reasons as to why those documents are important. So tighten up your belt. We're going to go for a fly with Sandra Brown, the mortgage machine. Good morning, Sandra.
Good morning, Reno. I'm Sandra Brown, the mortgage machine. We're here to talk to you about documents and details and what it is you need to get a mortgage, and then why we ask for it and different things like that. And let's just get really simple. The most important thing is documents. And I have to say, Reno, the biggest frustration for most people is they go, well, I got a mortgage 5 years ago. How come you're asking me for so much stuff today compared to last 5 years ago? That's the biggest question we have.
So true. And you know, you really can't blame them. They don't understand the process. You folks out there that listen to this don't understand the process, and that's okay. You only go once or twice, and you get one or two mortgages during your whole lifetime. So to understand the whole process and to try and remember the whole process is really not necessary. You've got us working for you in your corner. But when we ask you for something, there's a reason why we're asking for it, because we need it. And we wouldn't ask you for paperwork that we don't need. And you're right, Sandra. People that got a mortgage 5 years ago or got pre-approved even 5 years ago think they're still pre-approved today. And nothing could be further from the truth. Things change overnight. For example, I mean, we all have credit cards. Just by your credit cards going up towards a max, let's say you pre-approved 5 years ago and the credit cards were at zero. You had a $5,000 limit, credit card at zero, no problem. Your credit score would be one thing. This time around, if we check, you happen to have bought something big, like furniture, last week. And so you put it on your credit card and you took it right up to $5,000. Well, you know what? That's going to affect your credit. And so that's what we're talking about, paperwork, when we ask for it. But we're getting off topic a little bit.
Absolutely, you are, Reno. It's talking about that's what we really need, and the reason we do it. Some things, the reality between yesterday, today, last year, even 6 months ago, the rules are changing daily. And so we're asking you for stuff, because we don't want to keep asking you over and over for different documents, because we get one piece of document from you and then find out we need something else, and it's frustrating for you. So it's easier for you just to send us everything up front. The other thing that really annoys customers is the fact that I say to them, I need your 3 months bank statements. And they're going to say, well, you've never asked me for that before. I went to my bank, got it done, no problem, they didn't ask. Well, the reality is, if you bank with a specific bank, they have all your documents already there because they access your own bank account. You just don't know doing it.
They have your bank account for sure, because they can look at it, right? But they don't have all the rest of the documents. So let's actually start with the list of documents, and we're going to go through them here. We're going to go through some more detailed than others, but the important ones we're going to take our time with. Number one thing that you need to have is a job or an employment letter. In order to qualify for a mortgage, you need to be employed. There's no ifs, ands, and buts about it. You need to be employed. So we're going to ask you for a letter of employment. If you're in the market for mortgages, even before you talk to us, get your employer to do up a letter of employment.
I don't agree with that statement. A letter of employment before, no way, because you got a pre-approval coming in place. You're going to have to get the client to get that pre-approval letter. So yes, eventually you're going to need it. When you have a live deal, when you've actually bought a house and you have conditions to fulfill, you need the job letter. However, to get started, when you're doing pre-approval process, a pay stub, 2 recent pay stubs with T4s and notice of assessments, it makes more sense. And then when you actually have an approval, the job letter is a very, very, very important part of everything. We need to have that job letter to say that you work for that company, what you do for that company, how long you work for that company, and how you're paid. But that doesn't necessarily mean you need it up front, Reno. That's
all right. So let's go back to the premise that you have bought a house, because most people do not bother getting pre-approved. So you're going to come to us as you just made an offer. Your offer got accepted. That's the documents I'm talking about needing right now, because we're going to get you approved. So definitely the job letter is number one. And so you should have asked for it 2 weeks before making an offer so that it would be ready and dated correctly for now. A lot of people have a job letter in their hands. It's 6 months old. It doesn't apply anymore, folks. You could have been, well, COVID would have definitely ruined your job letter. So we need a current job letter, something that's less than 30 days old, something that states exactly what's going on. Hi, Bob is employed by us, XYZ company, has been here since 1922. Oh, well, not that long, but anyway, 1998. And he makes $29 an hour, and he is guaranteed 40 hours a week. If you have any other questions, please call me, the undersigned, and make sure that it's got a wet signature on there and a date. So that gives us the foundation to do, to work with the numbers or the real numbers that we're going to need to work with. Then there's 4 or 5 documents as we continue through this dialogue today.
Let's back up on that job letter, Reno. The most important thing about that job letter, right? One of the most important things is not only all the details in there, but a phone number for the lender can contact your employer to confirm you still work there. Because the problem with COVID-19, many people are working from home. So the numbers that are on all their job letters are an office number. They don't have access to that. So you got to make sure that the number that the lender is going to call is going to be the person they're going to reach that wrote that job letter to verify your job.
Yeah, good point. And you know what? That's probably, well, aside from the actual employment information, that's one of the key pieces of information, so that the lender will call to verify your employment. So if we make it hard for that lender to get a hold of the person he has to talk to, it'll delay things. And as you know, sometimes these things, you buy them on Monday and you guys want to move in a week and a half later. So all those papers have to line up and we'll be able to do the job that we have to do. The other thing about job letters that is key, okay, is not to be vague. Okay, a lot of job letters that we see say, well, he works approximately 40 hours a week. Well, approximately, we might as well take that job letter and throw it out the window because it doesn't count. We want to know, or the lender wants to know, he's guaranteed 37 and a half hours a week. Let's not call it approximately 40. So it has to be accurate. And a company, a bigger company that writes a lot of job letters knows how to write them. Generally, the smaller companies, you might have to look at it before you actually give it to us and have them redo it. So we want amount of money you make hourly, how long you've been there, the number of hours that you're guaranteed, a phone number where that person can be contacted and you will be contacted, and your name spelled out in full, and a date will generally get the items that we need. But a job letter is an important piece of.
And how you're paid, okay? Because some people get paid an hourly rate plus commission. We want to see that. If it's commission as well, put it in the job letter. If it's bonuses, put it in your job letter. Make sure that they're clearly stating how you are paid. A lot of people forget that. They say, well, here's my base salary, but then you do get other bonuses. Many people get that. So be clear about that in the job letter, because that is really important information in order to get you approved.
Yeah, you know, I'm just going to cover that back off just a little bit. So I've been dealing with a deal from last week that folks are great. I mean, credit is wonderful. The actual jobs are well over 6 figures. No, you know, no problem. They make the money. And I kept quizzing them. So you're employed. You're not in any way, shape, or form self-employed. You are working as a salary or by the hour. And the answer was consistently yes, 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 yes. So I always try to get my documents up front. So once I got the documents, I looked at it, and the guy, seriously, the gentleman in this couple makes $200,000 a year, but the salary portion is $13,000. So the job letter says his salary is $13,000. Yes, he makes 200, or last year he made $200,000, and this is why he made $200,000. So that requires a little extra for us. So just be aware, which brings us to the next set of documents that we're definitely going to need in order to back up that job letter, which in this particular case is the prior 2 years T4s and notices of assessment. So notice of assessment is exactly that, the piece of paper that the government sends you back saying we agree with your figures, and T4s is the piece of paper that the government or the employer gives you saying, look, last year you made $222,000, and here's our name on it, here's your name on it, and there's the actual amount. So that's what we need.
The challenge we're going to get, though, let's back up on that job letter. When we have self-employed people, they don't necessarily have job letters because they work for themselves. And really, a job letter is useless when you work for yourself because you're going to be the person signing the job letter. So why would you have that? So in exchange for a job letter, we need a little bit more information from you. It's going to be your 2 years taxes.
But regardless, we need the 2 years taxes anyway, even if you're employed. So I always ask for T4s, notices of assessment, and a job letter, and 2 pay stubs. Those are the documents. Those are the base documents that you're absolutely going to need in order for your transition to go, or your transaction to go very, very smoothly. What?
Nothing.
What? You're giving me hassles.
I'm laughing at you because you said I always get my documents up front, and we know that's a lie. Reno, that is a lie.
Well, we think about Maury Povich show or what? What Jerry Springer? Well, here's what Sandra's talking about. I'm always the lenient one, and she's always the tight ass one. She is the one that said the documents up front. So finally, after all of these years, she's convinced me to ask for my documents up front. But up until a few months ago, I was perfectly willing to take your word for it. So,
and how's that working for you?
Tell me that you used to make $200,000 a year, and I used to mark down 200. I got no reason. Why would you lie to me? So I'm $200,000 a year in the application, and then I would spend the next 3 hours doing the application. You know what? Everything worked. Everything was roses in that application. We were going to go buy this house. I was going to get you pre-approved. And finally, then a week after I got you pre-approved, you sent me documents because now you're buying a house. And basically, it's not exactly this, but like the other story that I told you, it wasn't $200,000. Okay, the job letter and the document said the salary was $13,000. Remember, that's quite a bit of difference between $13,000 and $200,000. So, and you guys don't, it's not that you're lying to us, you're not, because you think that's your salary, and it's not. It's how you make your money, and it's legit. But we need those details up front. So when Sandra's laughing at you, or laughing at me actually for saying documents up front, I've learned a valuable lesson. Get those documents up front. And besides, those documents up front make it easy for me and make it easy for you, because once we see them, we know exactly what they are.
Well, and the reality is whenever you put an offer on a house and you have conditions of finance, or some of you that don't do it against our advice, this is the most stressful period of your time. The last thing you want is for us to start asking you for additional documents. So if we have a lot of that stuff up front, we don't have to ask you during that stressful time. Right?
Yeah, you know, let's just jump back a little bit. At some point when you're dealing with your broker, you're generally coming to us because I don't know, the people at the bank are asking too many questions, and they're not friendly, and they don't answer their phone, you know, all that kind of stuff. You're generally coming to us for a reason. Also convenience and better rates. But you're expecting us to guess at what we're asking you.
And I don't know about you, Reno. Reno, I don't know about you, but I failed mind reading 101.
Well, my crystal ball broke a month and a half ago. So for the last 6 weeks, I've been totally on my own. It's like being lost in the woods. I don't know where I'm going. But before, I had a nice little crystal ball. And whenever somebody said 200,000, I just, oh, yeah, that's good. Here, let me mark that down. And away we go. And let me go and invest about 7 or 8 hours of my time to complete this deal. But those numbers are not accurate, folks. And that's the problem. We need to act with some accuracy. Now, on the other hand, if those numbers are accurate, whatever they happen to be, remember, Sandy and I are the credit experts. So we might be able to change some of the things, not to change the conditions, but some of the way we present this application to a lender. And you know what? When we present it, first off, I wouldn't present a deal to a lender unless I thought I was going to get it approved. If I think it's already going to fail, I'm not going to present it. So if I can have a chance between your honesty and $13,000 salary, but I make $200,000 a year, we would have had a little more dialogue there. No problem at all, because we would figure it out how to present that to the actual lender and get it approved. So that open dialogue prior to getting the documents. Then at that point, when Sandra's talking, and says, "Well, you know what? You're asking me for too many documents." Well, there is no such thing as too many documents. Remember, it's part of the golden rule, and this is sarcastic as hell, but I'm going to tell it to you. Okay, the golden rule is the man with the gold gets to make the rules, and the man with the gold in this particular case is the lender. If they're asking me, Reno, for Bob's whatever, last three pays and the bank stubs, it's not me making that stuff up in my head saying I need that for no reason at all. I'm asking you because the lender has asked me for it. So these documents are very, very, well, it's crucial. They're the glue that holds this whole deal together.
It's very important. It's absolutely important. But now let's get on with the topics of different income sources and things like that, and what exactly we need to do that, to prove it. So the other thing that we absolutely have to have within the last 30 days is your pay stubs. And the pay stubs should be the same as your job letter. Right? So it's just simple as that. A pay stub to verify what you've told us. You've told us you make this amount of money. It's not us that's putting this stuff in there. This is what you tell us is what we're using on your application. And without that, you might as well forget it, especially if you're a person who's paid by the hour. If you're a self-employed person, that's a different story again. There's other ways we have to show.
So let me give you what gives me comfort when I see these numbers. And remember, I'm the first one that is either shocked or comforted by the numbers that I see. Well, any broker. So you've just told me that you make, I don't know, $100,000 a year. So when I see the job letter first, which is what I asked for up front, and it says he makes the salary of $100,000, right there, I'm 99% satisfied. Then I got your two pay stubs. And when I do the math with the numbers that are on your pay stub as part of your regular salary, not your overtime, none of that, beautiful. And I backed up the 100%, the $100,000. So I feel extra comforted. Okay. And then I have a T4 slip, which is what your what your employer gives you, that says, look, he actually made $132,000 last year. I'm fine. I'm only claiming on 100. You qualified on 100. I've got a job letter and pay stub that says 100. I don't need 132. I need 100. So I'm only going to qualify at 100. And then when you give me your notice of assessment backs up your T4 that says made 132,000. And then I look at the bottom line on the notice of assessment, and it says you owe zero tax. So as you can see, from the job letter to the pay stub to the T4 to the notice of assessment, to the bottom of the notice of assessment, that shows here's how much money you made, and you've already paid the taxes on it. So that's critical for me.
And the other thing too with the pay stub, okay, and this year is very unique. So there's nobody planned on this pandemic, but this is a very good example. We're going to get your pay stub. We're going to look at it and say, wait a second, you told me you made $50,000 is what your salary is a year. How come your pay stub says your year-to-date amount's $13,000? So this way we can have that conversation before we actually try to get you approved or during that process. So you're going to say to me, well, I was on mat leave or I was injured or whatever the reason. There's always a valid reason. Well, 99% of the time is a valid reason why your year-to-date amount is. And if we don't know the story and why, how can we talk about that? We want to be honest with our lenders as well as everything else. So if we have the information, we can at least address it. You can't hide this stuff because just like Reno said, the NOA doesn't lie, the T4 doesn't lie, the pay stub shouldn't lie, nothing should be lying. And if it all doesn't make sense, then we got to think twice about your application. That could be what declines your deal.
Yeah, you know what? We're here. We work for you. So we're not trying to make it difficult for you. We're actually trying to make it easier for you. So supply us some of the tools that we ask for, because that's how we make it easy. And that's how on funding day, your thing gets funded and you move into your new house. So please listen to what we say. Now, remember, there's a lot of deals that you buy in, and I don't know, January of the year, and you don't get to, you chose, or the lender, not the lender, but the seller decided he didn't want to leave until July. Well, that's 7 months, a period of time that went by. The world could have changed like it did this year. It changed. You had a great job in January. Come March, COVID came in. You don't have a job anymore at that point. And then hopefully you went back to work sometime in June. So we need to account for all of that. So just because you've given us something once 4, 5, 6 months ago, doesn't mean we're not going to ask you for, or when we're asking, the lender's asking, a new backup piece of paper saying, you know what, here's the new job letter. It also, this time it said that he was affected by COVID, but they went back to work on June 3rd or whatever it was, and he is full-time employed again. So that's the kind of comforting thing we get. That also takes these documents that have been in our hands for a very long time, also applies to some cases where our next topic, some of the documents you're going to need, is a source of down payment. Okay, so one of the things we're definitely going to ask you for, and Sandy, I don't know about you, but that's definitely the one that I get the most pushback on. Why does the lender want to know that the money's been there for 90 days? So let's talk about that.
They say, hey, I don't need that. Why do I need that? I never needed it before. Again, your bank has that information because they can see in your bank account at any time they want. They can do that. We need that because we need to show that the money is coming from legitimate sources, that it's not fraud. That's what we're confirming. So by providing us those documents, we can at least verify that it's not fraud.
By the way, it's not us that doesn't trust you. It's the rules that everybody has to follow. Question. This is a question for you. Have you tried to make a $10,000 deposit into your own bank account lately? Lately, I'm talking the last, 10 years. Have you tried to make a $10,000 deposit into your bank account? Well, the reason I'm asking you that is if it is an over $10,000 deposit, you're going to need to have proof of where that money came from, the cash came from. So it's not something new. Money laundering and fraud and real estate, and is one of the ways to do money laundering, or apparently it is. One of the ways to launder your money is through real estate, by coming down with a huge chunk of cash as that down payment, and then mortgage money, et cetera, et cetera. So they want to know, and by the way, 99% of the people that we're talking about right now are legitimate people who work a job. They save their money consistently and, eventually buy a house, and we have to prove that. So the lenders are asking, most of the lenders are asking for a 90-day proof of savings history. So that's 3 months proof of savings history. Because a lot of times you may pull that money from underneath your mattress a month before closing and deposit it into your bank account. You better have a good story, or we better have a good story and reason as to why it was. And by the way, being under the mattress and decided to pull it out because it needed this down payment does not work. So down payment sources and history become an important part of this documentation that we ask you for. We know you have it, but we need to document how long it's been there and that it is yours. And the premise of this thing is anybody who's laundering money wants to do it in and out. There's no way that they would deposit money in you would deposit money in your account, let it sit there for 90 days in suspense before you did anything with it. So 90 days is a nice safe period that the government thinks anti-money laundering.
And again, it's that those people that that were doing that illegal stuff that has caused these stricter guidelines for us. Because at one time we never had to do that. But if there's going to be people breaking the rules and committing fraud, it's eventually the governments, and everybody's going to step in and say, hey, wait a second, let's do something to mitigate that and try and reduce that possibility. So that's that. But the other important thing is that we have to know where these down payments are coming from. Because if you're telling me that, yeah, I borrowed it from John Doe to buy the house, but you're telling me that it's a gift from your mother, that's mortgage fraud. That's against the law. You can't do that. If you tell me I'm borrowing the down payment, that's different. Then we're gonna tell the lender that you're borrowing the down payment. And if you qualify, that's what we will do. So it's important that we don't, you're not lying. You got to make sure that we're just telling the lender exactly what it is you're doing.
Yeah, you know what? Clarity is the simplest thing it can be. There's no reason for you to hide information to us or misrepresent information to us, because remember, we're on your side. So we're going to try, and if it's a nice, legitimate, clean reason as to where everything is, then we're going to relay that information onto the lender. If it doesn't sound exactly the way, because we already know what the lender wants to hear. So if it doesn't sound the way the lender wants to hear, we're going to have our dialogue between us, and we're going to say, well, you know what? You can't borrow your down payment. We're going to tell you, you can't borrow your down payment. Your ratios won't support a down payment loan, so we can't do it that way. You can't get a gift from outside of your immediate family. So here's the way we need to do this. And so we can become part of the real good solution for you to be able to buy a house. So down payment's important. Pay stubs are important. Job letters are important. T4s are important. Notices of assessment are important. And yes, sometimes the lender asks for, okay, I want to see that pay stub being deposited for 3 months. So
T1 generals. You forgot T1 generals for people that are self-employed. T1 generals, letters of incorporation, financial statements, depending on what it is, how you make your money is what we're going to tell you we need from you. That's the documents we're going to need. The government wants to see that you've paid your taxes and you're not behind on taxes. So we're going to need to see proof of that. We're not asking because we're trying to make your life difficult. We're trying to help you get to the successful outcome that you want. And the last thing we want to do is say you're approved, and then we get all your paperwork and find out that it's all wrong. And then we have to tell you, sorry, you don't qualify anymore, but yet you've already bought a house.
Hey, Sandy, we only have 3 minutes left. You know what? And I like being the commando, the mortgage commando, the mortgage guy. I like being that guy. I love being that guy. So let's try and cover off in the next 3 minutes. What have you done? What have you received that's a little bit off during this week? Is there any deals that you've got that
I do. I'm doing a lot of self-employed people that they don't declare it on their taxes, strictly because they have wonderful accountants that are very creative and they write off everything. However, all their debts are coming out of their business anyways. So if they just tell us what's going on, provide us with those documents, we can look. So this one client, she didn't qualify on what she was paying herself from the business. But whenever I looked at it, I'm like, wait a second, everything for the business is coming out of your bank account statements. So by me having those bank account statements, I'm able to redo it and make sure that it works. So hopefully we'll have that one finalized. Many of them, if we're telling you something, it's because we're trying to help. And I had another one, she's self-employed. It took us a couple of tries because their credit scores were a little low, but no problem. We love working with self-employed people because there is a way, as Reno always says, that there's a mortgage for everybody. It all depends on how much you're putting down.
Yeah, and that's the key. And of course, my little quirky deal this week was a little different. Terminology. The internet's a wonderful thing, but it's also the biggest fake news out there. So I had a call about a week ago, somebody, and talking to the customer, nice person. And so we got to the point where I asked him, how's your credit? Well, he says, I'm rebuilding my credit. We have that a lot, so we understand that. And in rebuilding credit, my next question is, has there been a bankruptcy or consumer proposal? And he says, yeah, I had a consumer proposal. I said, well, that's not a bad thing. Are you fully discharged? Because once you're discharged, you can go back to almost normal. And yeah, he says, I've been discharged about 2 years ago. Okay, well, as the dialogue continued, and then, he gave me permission verbally and written to pull a credit bureau. I pulled a credit bureau. There was no consumer proposal, and I saw a string of 10 or 12 debts that were written off. Okay, so either the accountant, the trustee who did the consumer proposal, forgot to enter the all those debts into the consumer proposal and then filed it as a consumer proposal, or something else was going on. Well, guess what? Something else was going on, because when we got to the bottom of it and when we checked for a second time with the credit bureau, there was no consumer proposal. There was just a bunch of write-offs. And it was a friend of his who decided he was going to do his friend a favor and try and make a settlement with some of these 14 or so lenders and saying, okay, look, he owes you $12,000. He's going to pay you $500 of that period as what he's going to pay you. And he's going to pay you over the next 3 years. Is that okay with you? And they said yes. And most of it was verbal. So be aware of what you're talking about. If you're talking about a consumer proposal, if you're talking about a down payment, if you're talking about a job, self-employed, fully employed, be aware, okay, that not everything that you see on the internet is real. So talk to one of us. We'll have that conversation with you, and we'll see whether or not we can help you. Most times we can. Hey, we got to go. We're taking over 30 minutes now. I know that Rob is getting nervous, push the button. I know that Sandy wants to fly off to do another deal. I know I want to be the mortgage guy. I need to do things today. So I got to go. We got to go. We'll talk to you next week. Bye-bye.
Bye.